Welcome back to our mini series, Your Money and the Election. Stop fear and take control. It is our mission to help guide you through top questions concerning your finances as we head into a testy election season. Edison and I are excited to dive into today's episode where we will explore a rather hot button, trendy topic.
That's right. Welcome back, everyone. So today's topic touches on a classic metal, one deemed to personify success, commitment, and winning, and that's gold. Now, gold isn't just an element on the periodic table, right? That symbol AU, but gold symbolizes prosperity and, in this time, a safety net from the whiplash investors are experiencing from the stock market.
Are we looking at another California gold rush, Edison, or is this investing in controversial element simply fool's gold? Let's find out.
So it may be, right? It's no secret that gold has been deemed a valuable asset for centuries, dating back as far as 4500 BC. For ages, people have viewed gold as a sign of wealth and status, which has bolstered its value on a personal, societal, and even economic level.
While an important commodity, gold has always been America's backup. It's kind of like a third string pitcher. You only bring out when you're in trouble.
That's pretty good. Exactly. The thing with gold is that people only turn to it in times of need. I want to stress that point. When the value of the dollar is shaky, or when the economy is a little more wobbly, or when inflation rises, or when the world is on an unstable stage, those are all temporary things that the notion of gold tends to share in. But again, they are all temporary. Now, while gold might make sense in the very short term, it doesn't necessarily have the highest return on investment long term. Data from Bloomberg indicates that stocks and bonds have both outperformed gold over a 30-year period.
Wow.
I'll stress that. The big reason for that is that we are not always in crisis mode, though 2020 has certainly given everyone a run for their money on that front, David.
Yeah, that's a great point, Edison. And it gets me thinking about what people want from gold as opposed to what gold actually does for them. Like many investments, when gold is appropriately applied to a portfolio and left to mature for decades, it could balance the ebbs and flows of the market as gold and stocks tend to react oppositely to market conditions.
That's right. And what you're alluding to here is the idea of safety. When an investor's confidence dwindles, they often seek a safer alternative to stocks. Now, such an alternative can either be cash and often can be thought of to be gold. But perpetual safety is an unrealistic vision for your portfolio. Markets will always experience volatility, often much more than investors tend to care for in the short term.
And we have a little saying here at Credent Wealth that came to mind when you were talking about that. And it goes like this: all investment strategies work some of the time, but no investment strategy works all of the time. Gold is simply another example that can tie back to this core belief.
Definitely. While no one investment strategy is the end-all be-all, by carefully creating a portfolio that aligns with your investment objective, your investment timeline, and your long-term goals, you can set yourself up for better opportunities in the future. When times get hard and volatile, investing in a substance like gold might seem like a best way to balance your losses. However, staying the course in your predetermined plan and making intentional updates to your portfolio may be the best way to achieve your long-term goals.
That's right. So what we need to do then is remember you don't have control over the markets, but you do have control over how you react to them. Our team at Credent Wealth is here to help you create a plan that helps you reach financial freedom. Freedom doesn't mean having complete control over every little change in your portfolio. Instead, it means building wealth so you can live your life to the fullest.
And to live your life to the fullest, you need to build a stable, long-term portfolio. Please remember, economic volatility is always temporary, and investing in gold is merely a reaction to a temporary state, which won't get you where you need to go long-term. We thrive in helping clients just like you succeed every day, whether with gold or without it. So on that note, I want to thank you for tuning into today's video. Please look out for our next video in our election series, where we're going to tackle a very interesting topic: taxes.
Oh, taxes. Man, I'm already jazzed up to dive into taxes. Check back in on Thursday for our next video in the election series. If you have any specific questions about the role gold plays in your portfolio, contact your local Credent Wealth advisor today. We can't wait to serve you.